Hi, hello, good morning, my young officers. Welcome to the session called as Complete Course on Indian Economy for your prelims and mains examinations. So this is Nisha Nujumudeen, your educator at Unacademy. I'm a GS faculty for UPSC, an economist, and I've taught 60 plus GS batches. A mentor as well as MCQ expert. This is my Unacademy profile, guys. So now I do a load of free as well as plus classes. So these are the current plus free class which I am doing morning 9:30 a.m. There is a free class on answer writing, taking into consideration the upcoming mains examination. That is top 500 question answer practice for UPSC 2020. And now at 6 p.m. on a regular basis, I am doing top 2500 MCQ series, guys, to ace your UPSC Prelims 2021. That is in fact a hit course done by me. Along with the proper techniques, strategies and all. So to know more about it, visit my profile and do follow these classes. The links of all these free classes is given below the description box of this video. So you can follow me there as well. Apart from that, I'm also one of the Unacademy's top plus faculty. These are the plus courses which I've been doing currently. That is course on daily current affairs. A DCA or let's say a DNA analysis will be done with a proper note format. Sub kuch like current affairs from every important sources which is important from the prelims and mains examination. It will be made and analyzed from the UPSC perspective. Notes will be given to you in very handy format and along with the basic concepts, matlab coverage of basics. That will also be done all throughout the session. So go through those plus courses, but to come for the plus classes you need to have a subscription, guys. That is, you have to subscribe Unacademy Plus using my referral code nisha.nujumudeen. Only then you'll get a discount of let's say up to 20%. The details of all that is given below the subscription box. You can just go through. For more details, you can even follow me via my Telegram channel. The name of my channel is Nisha Nujumudeen at Unacademy for UPSC. It's a public channel. You can join that as well. So now to begin with, guys, in this particular session, okay, we'll be doing Chapter 5, Part 1, which deals with banks and financial markets. So today we're going to talk about banking in this particular Chapter 5 of Economy. So there'll be 2 to 3 parts in this particular chapter because it is quite a big one. So now, the concepts of the topics covered under this particular chapter is oneness. Since we are doing the bank and the financial markets, we'll be covering as to the definition of banks in India. How is banks defined? Then the functions of banks, the basic things, the different type of banks. For you to understand the functioning of it accordingly, the very basics, which are very, very important from the prelims perspective. Apart from that, we'll also be discussing regarding the various developmental finance institutions like Indian Finance Corporation, ICICI, then SIDBI, IDBI, UTI, LIC, GIC, etc. etc. So a quick coverage of all these things will be done in this particular class, which will be very, very useful for you to prepare your UPSC Prelims and Mains examination as far as economy is concerned. Okay. So yes, Bharat, good morning. Hello, Alok. Hi, Manjuda. How are you all, guys? So yes, people are slowly joining. Let them join. I think you just got the notification now. Am I right? Yeah. Hello, Amanda. Good morning. So yes, where are the others? So yes, guys, all ready for banking? Yes, Rohit. Yes, somebody called hi. Okay, people are slowly joining. Aram se join karo. Subah getting from bed. Ma'am, we just woke up from bed, ma'am. Let us take some time. Hannah, I said so. Come on, guys. Quickly, with a lot of josh. Come and sit for the class. So thus, guys, to be very, very precise and short and interesting, we have to understand what is banking, right? With the context of our country, India. So basically, what is a bank? All of us know what is a bank. The place where you go and deposit your money and the place from where you can even borrow or lend money, right? So now a bank does what? Kind of financial transactions because the involvement of money is coming. So in very, very simple terms, bank is nothing but a financial institution because they perform the deposit and lending function. Now, this so-called concept of bank, it allows what? A person with, let's say, surplus or excess money to save. How can they do that? By depositing his or her money in the bank. So for example, if I am going and saving, let's say 10 lakh rupees, excess money I have, I'll be earning an interest rate for that, which is again a benefit for me. Similarly, when I do not have money, when we do not have money for starting a business or for any other purpose, we go for availing a loan. And now the bank will give money to that person. It could be the businessman, the investors, the personal people, for any kind of persons. And now the bank will charge an interest based on whatever kind of loans you are taking. Thus, in short and simple terms, this financial institution called as bank, they act as what? The next keyword is intermediary between the saver and the borrower. According to your needs, banks acts there. Clear? This is how you'll define your banks. Now usually it is said that though the bank is accepting deposits from people in the form of fixed deposits, time deposits and all, it doesn't mean that if you go and deposit a huge money, bank is going to give you a very, very high interest rate. In order to capture the customers, come on, the banks many a times, they do give, kind of interest rate. But normally, if you see this financial intermediation, which is done by the banks, where, deposits are, been put by households to banks, and banks give an interest rate to households, and loans given by banks to investors, investors give interest and all, works in a different way. Always the banks will try to earn more from the people whom they give money. That is from the investors or somebody who gets loan, and the bank will always try to give less interest because money goes from the hands of bank. So always they try to give less of interest rate to the households who go and deposit their money in the form of fixed deposit and all. That is how this financial implementation works. You all know that because all these are the basic things, right? The practical things. Now the whole point is there is something called as deposit rate and lending rate. What are they? Normally when the bank take a deposit from the public, like for example investors going and depositing some money, that will be at a much lower rate. Okay, so now when the bank takes a deposit from public at a much lower rate, that's called as deposit rate, and they lend the money. From the money what comes to the bank, from that money these commercial banks like your SBI, your Canara Bank, etc., they start giving out to the investors or the people who are in need of it across various sectors for the activities of the economy to carry forward. And that when they give money, what happens now? At a higher rate of interest, because that is the revenue earning point for the bank. That is why that is called as lending rate. Clear? You can connect this to the RBI, the monetary or the credit tool instruments by the Reserve Bank of our country. Yesterday what we discussed in chapter 4 part 3 based on the monetary policy tools, etc., bank rate, interest rate, discounting of bills of exchange, etc. Clear? All these are connected. Now you may think that what is this deposit and lending rate? It appears to be very simple. But for the UPSC perspective, guys, for the prelims examination, from this very simple concept, they can twist you. How? In the context that they can ask you the difference in one statement. Like they can confuse you with net and gross, interest spread. That is the difference between the so-called rates, the deposit and lending rate. What is it called? It is called as net interest spread. And now the interest spread, it will keep constituting what? The income of banks. When more and more interest is being charged from the customers by the banks, automatically revenue comes into what, guys? Into the account of banks, right? So this is all about the bank. So now, don't you think so? It's very, very important, to know about the banking of our country, India. So let's get back to some to history, guys. If you see, when you talk about bank, of course, knowing the definition of bank is very, very important. But apart from that, don't you think so? It's very much interesting for a person to know which is the very first bank of India. So you studied about bank. So now always you should study in such a way that what, how and when. Like when it evolved, how it evolved, and what was the reason for the evolution of this so-called banks currently which has been functioning, all these banks. What was the basis for the origin, right? If you see the very, very first banks. Tell me guys, the very first banks of our country, India. Don't give me answers like State Bank and Canara Bank and Punjab National Bank. Don't give me answers like that. I'm asking you even before the independence. The pre-independence period also, which means the very, very so-called first bank. Any idea? Yes, quick, all of you in the class. Yes, Manchuda, Alok, Bharat, Dohit, then somebody, Amanda, hi, etc. Where? Quickly get the right answers. The question is, which is the very, very first bank for our country, India? People are guessing, I believe. Come on, guys, answers. What a wonderful answer. Look at Manjunath, HDFC. 2 to 3 on your heads now. Amanda, Allahabad Bank. Oh my God, way beyond. She went to Allahabad. Manjunath went to HDFC. I understood that you are having some accounts there. That is why you are saying this. What about the others? Again, IDBI. Wonderful, Garima. You are amazingly great. Kudos to you, my girl, for the right answer. Yes, it is Hindustan. Very, very good. And that's an absolute kudos to you for the right answer. If you see, Yes, Amanda, perfectly true. Yes, Elizabeth, SBI or PIB. No, 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 it is actually Hindustan. If you see, the very first banks of our country, India, was the Bank of Hindustan. I repeat, I'll just write it. First bank. Okay, wait. First bank of India was Bank of Hindustan. Now, what was the time period, guys? The time period was 1770 to 1829. Okay. And also, along with that, you had something called as what? This General Bank of India. Not Central, but rather General Bank of India. Please note it. So, the Bank of Hindustan and the General Bank of India, they were considered to be the first Bank of India. And this Bank of Hindustan was in the period of 1770 to 1829, and the General Bank of India was in the year 1786. So way back you had the so-called banking facilities as well. Don't you think so? Oh, now Sandeep is saying, Sandeep and Alok, oh, is it so, ma'am? Yes, that is it. Subha coming and giving me HDFC Allahabad. Tell me what I should do with you people. Thank God you didn't say, the recent Axis Bank and all, guys. Anyways, I was just kidding. So did you understand, my young officer? So you may think that, yeah, I could see Alok saying RBI. Come on, there is a point in what Alok said also. RBI is very important because even before independence we had that. So now that is again in the post-independence era. If you divide it like that, the so-called very first banks for our country was the Bank of Hindustan and the General Bank of India. Now, do you think this Bank of Hindustan and this General Bank of India, do you think they are functioning? Do you think? Definitely no. Now they are defunctioning, right? And now there were 3 presidency banks. Which are the 3 presidency banks, guys? Any idea? 3 presidency banks was there. Which are they? From Bengal. One is from Bengal, guys. Very easy to understand. Like the University of Calcutta, you say. Come on, the Bank of Calcutta. So the 3 presidency bank was the Bank of Calcutta. Okay. Bank of Calcutta. Now, then the Bank of Madras. Second is the Bank of Madras. 1, 2. And one more is there. What is that? The Bank of Bombay. Clear? All these you would have studied. Yes, wonderful, Pushparani. Yes, Bombay, Calcutta, Madras. Wonderful. They are the 3 presidency banks. Okay. And since 1806 it has been established. Why? Why do you think this Bank of Bengal, Madras and Bombay has been established in the year 1806, guys? The reason is because they want to cater to the needs of the so-called British East India Company. Because during that time we were in colonial rule, right? So basically to address their needs, only all these 3 presidency banks at Bengal, Madras and Bombay was put forward. And now, these 3 presidency banks, guys, what happened? In the year 1921, I repeat, in the year 1921, what happened? Come on, they got merged or they became one together to form something called as the Imperial Bank of India. I repeat, the Imperial Bank of India. You would have heard about this, the Imperial Bank of India. This particular context or term is important from the prelims point of view, because sometimes the UPSC can kind of confuse you with the word with Imperial Bank and all. So now actually the merging of these 3 presidency banks of Calcutta, Madras and Bombay in the year 1921 has given this so-called bank as Imperial Bank of India. Clear? Now what is this Imperial Bank, guys? The very popular bank. All of you know this. I think probably people will be having accounts also there. This Imperial Bank is what? None other than your State Bank of India, popularly known as. This Imperial Bank later they became the State Bank of India, SBI, and that too in the year 1955. So in 1921 these merged, and after some years, after your so many years, if you see 1955, what happened? Come on, it became to what? It became your State Bank of India. Clear? After the independence. So now we have been talking about all these things, but then we didn't talk about RBI, right? In the evolution of banks, definitely RBI holds a very important place. That is always there, guys. So now as far as RBI is concerned, come on, that is very important when you study about banking to study. RBI was set up in the year, which year, guys? In the year 1935. And how? Is it by Government of India? Definitely no. It is not by the Government of India or by any sort of resolutions or anything. Rather by an act, guys, called as the RBI Act of 1934. As per the 1934 RBI Reserve Bank of India Act only, RBI was officially established in the year 1935. Okay, and now, initially they were established as what? Initially they were established as a private bank. I repeat, initially as a private bank, with two extra functions. What are the two extra functions? Regulation and control of banks in our country, India. And along with being the so-called banker of the government. So the regulator, control of banks, other commercial banks in India, along with whom guys, with being the control banker of the government as well. But though that is the case also, this was during the year 35 when RBI was initially introduced. Okay, it was having the context or the status of private bank with some privilege and powers. But after independence, now after nationalization, I can say literally after nationalization in the year 1949, what happened? Now this RBI, they merged as the central banking body of our country, India, which became the apex or the core banking. Today, RBI is the mother of all banks, right? They give advices, instructions, everything, sub coach to the commercial banks of your country, like your State Bank, your Canara Bank, your Punjab National Bank, etc., etc., etc. Don't you think so? Perfect. Now, there are so many, backgrounds for RBI as well. If you see, in the year 1926, if you see, okay, there was something called as Royal Commission. Okay. Now, this Royal Commission, what they do is that on Indian currency and finance, in the year 1926, the Royal Commission on Indian currency and finance, which is currently known as the Hilton Young Commission, will be knowing this. Those who know the Hilton Hotel, the quite famous hotel, you'll know this. The Hilton Young Commission. You would have studied this guys in history as well. So now in the year 26 only, this Royal Commission on Indian Currency and Finance, which is also known as the Hilton Young Commission, they are the ones who recommended what? The creation of RBI. So RBI did not come like that, because you had all these, in Bank of Hindustan, which all these stuffs initially, then you had the presidency banks, which later merged to become the Imperial Bank, and that is how your State Bank and all came in. But now RBI came before that, before your State Bank, right? So now, simply like that, RBI was not put forward. There were some recommendations put forward, and that was by a commission called as Hilton Young Commission. Clear? And that too in the year 1926. But after the merging of the presidency banks, Bank of Bombay, Kolkata, Madras only, this RBI concept was put forward. They didn't say directly RBI, but a central bank is required, they said. And the idea was twofold. One is they wanted to have a central bank for the country as per this commission, is because to separate the control of currency. Okay, that is, controlling of all this currency should be completely separate, and the credit from the government, or let's say the money that you get from the government, should also be separate. They should have separate control on that. Control of normal currency and the money credit you get from government, along with to augment all the banking facilities throughout the country. For this particular purpose, only during that time, the Hilton Young Commission demanded for the creation of what? A central bank for the country. One single bank to head everything. That is how your RBI was put forward. And thus, initially, in the year 1934, 1935, it was put forward as a private bank, I told you. And they started with the share capital of 5 crore rupees, guys. They started as a share capital as 5 crore rupees. Then later after nationalization and all, in the year 1949, they became the central or the apex bank of the country. Clear? This is how. This is actually the history, guys, of your RBI. Perfect. Now, apart from that, there are some more interesting, information about RBI. That is the central office of RBI. Okay. Where do you think initially? Is it in Delhi? People may think that, come on, it will be in Mumbai or Delhi. Never. The central office of RBI, initially when they started, it was put up in Kolkata. The current Kolkata, guys. It is Kolkata, but it was Kolkata now. And after that, in the year 1937, that is in 1935, it was in Kolkata, the office, central office. And then in the year 1937, they shifted to Mumbai, and even today, you have it there, right? But now, from a private bank nature initially, your RBI became the most important bank. So now hereafter it became a bank of public nature, right? But since the bank of function of RBI became public in nature, the RBI Act of 1934, what happened? They have provided the appointment of a person called as governor and then deputy governor, guys, by the central government. Who is the current governor? We all know, none other than Shaktikanta Das, right? He was also an IAS officer. So even if you people become IAS officers now, you all can, there are chances for you to become the officer, governors as well, if you are very much efficient in certain fields. To be an RBI governor is not a joke, guys. The experts from economy fields and etc., they'll be recommended for that. But this time, if you see, out of all the political staffs and the performance-wise analysis, Shaktikanta Das has been appointed as the RBI governor, right? Okay. Clear? Now, let's have a look at the functions of banks. This is the history of your banking, guys, wherein you have to understand regarding how it emerged. The reason is because when you understand the history of it, or the origin of it, you will have a better understanding as to why you are studying that. It is not something that popped up just like that. You understand? There should be a reason for why you study. That is why all these informations will take you to that scenario. It will be like a story. So it will be very interesting. Don't you think so? Yes, Sandeep. Perfect. That is why I give you these informations. These are not included in the slide. Okay, in your slide it is not given, but I just want to tell you. Let my students not miss any information, because many people will not tell you these things because this is not in your syllabus. But it's good to know. Kabhi, you know, some things are good to know, to have a depth of the knowledge. That is why I always tell you, learn more, study less. That is, have a practical knowledge of all these things, like what, why, how and all. So now when you learn more, you get to know what to study and what not to study. That is why they said that study less and learn more for UPSC. So to the examination point of view, these are enough. Whatever I am giving the slide, but these are little extra bits and tips. Take care. Now, my young officers, the functions of bank. Come on. Like the functions of money, again the functions of bank is very, very simple. Just in like 5 minutes we can cover it up. Primary function, secondary function. Primary function consists of accepting deposits. Very, very true. And granting advances or giving loan. Secondary is what? Agency functions and utility functions. You can just go through the accepting functions and accepting primary functions. Accepting deposits means from the public, saving deposits, fixed deposit, current deposit, recurring deposit. Giving loans or granting advance means overdraft, cash credit, loans, discounting of bills. These terms are very, very important. We are going to have a discussion on all these terms today. Clear? Quickly we'll have a discussion. Then agency is talking about your periodic payments. Then collection of checks, portfolio management, then transfer of funds and all. Then utility is based on your drafts, lockers, underwriting of issues, then social welfare programs, etc., etc. Based on that, your utility function of bank takes into consideration. So you need to know some concepts, okay, which is very, very important. That is why we are studying this. So now, what is the so-called S1 essential feature or function of the bank, guys, which is a financial intermediation? If you see, financial intermediation is the most important, or let's say the key role or function of a bank. We all saw that, because the process of taking funds from the depositor and then from that deposit giving loans to a borrower, that is called as financial intermediation. They act as intermediary, right, between the lender and the borrower, between the depositor and the lender, or the depositor and the borrower. So that's through the process of such financial intermediation. Now, what is a bank doing? They are able to transform assets into liabilities. Look at this, assets into liabilities. They are earning out of it now. And now through this, they even promote what? The so-called economic growth. Because they'll keep channelizing or having a proper, systematic channelizing of funds from those people who have surplus money to those who do not have. For example, let's say Sandeep or Alok is having surplus money. They're running to bank and they're depositing everything. And they're getting some interest rate at a lower rate. But still they're getting some benefit or interest. Now, these money will be used by the bank to give loans to, let's say, Amanda, to Pushparani, to me, etc., etc. So, those who have surplus money, they are going and depositing. From that money, bank is actually giving to the people who need it. So, don't you think so? They are kind of channelizing the fund. Now, in that context, they are automatically promoting with regard to the economic growth of country, because the people's money is being used for used to give to other people. By keeping the so-called channel banking with in the context of interest rates, and making sure that these money which the people are getting as loans, it could be used for various productive activities. Maybe it could be for starting an industry. It could be starting any productive activities. You understand? So automatically it could lead to the what? Economic growth. Clear? This is how this is the meaning of channelizing funds in simple terms. Now, apart from that, the bank is also a risk mitigator, because the savers, guys, they allow them to deposit their money safely. So the risk of theft, robbery, all these are prevented. If you keep at home, come on, people can steal your money. People can, literally, if you carry, you can even lose it. So now, apart from that, if you keep a money in your room for, like, let's say for 2 to 3 years, if it is 1 lakh, means 1 lakh will only be 1 lakh, right? But if you put that 1 lakh in your bank, that 1 lakh at the end of the day, it can become up to 1,50,000 or at least 2 lakh. You start earning interest monthly, right? So there is a lot of benefit out of it. So that's always better to reduce the risk and earn better by depositing in the banks, either in the form of demand deposits or fixed deposits. So banks provide various accounts. What are the accounts? Saving account deposits, demand deposits. So, and now this demand deposit and time deposits are the hit list topic of UPSC. I have told you during the 6 p.m. class which I take for you, and even in the current October 4, 2020 prelims also, questions from this area was there as per my prediction and the questions what we did. Remember, the same keyword. The only thing is, UPSC give you a question based on the practicality, applicability question, based on example, 1 lakh. Remember, 1 lakh is withdrawn, what happens? Like what happens to demand deposit? Will it increase the money supply, or will it increase more than 1 lakh? And increasing by more than 1 lakh was the answer for your UPSC Prelims paper. So it's very, very important, guys. Maybe the coming prelims you can get based on time deposits, because time deposits, demand deposits, all these are very, very important in the context of, non-banking financial companies. Then the measures of money supply, that is M1, M2, M3, M4 and all. And M3 is about the broadest form of money. There you have your time deposits and all. You understand? So kindly go through it. These are the hit list topics. So when you make your notes, make a point of making sure that you are going through it properly. Clear? Okay. Now we are going to talk about the different types or structures of banks. So one of the most important essential features of bank we saw financial intermediations. Then through that they can even transform assets into liabilities. Point number 3 is promoting economic growth by channelizing funds. Then as under the heading financial intermediation, they can even act as risk mitigator. They can even provide accounts like a saving and demand deposit, making sure that they're giving liquidity with security. Clear? Now the next one is the different types of structures of banks in India. Here we go, guys. RBI, Indian Scheduled Commercial Banks, because in our country commercial banks, guys, they are scheduled and non-scheduled. It's very important to know the difference of them. Okay, that is very simple. The banks that come as per certain provisions of RBI, they come under Indian Scheduled Commercial Banks based on their shares and all the stuff. The others come under non-scheduled. Then apart from that, the State Bank of India and the associated banks. Then the 20 nationalized banks. People may think that why State Bank is given more importance compared to the other national banks and all. Because the State Bank of India, guys, it has a long history. And the Imperial Bank of India, that was actually transformed to the so-called SBI way back. So that is the reason why the State Bank of India is always considered more important after out of all the commercial banks. Clear? Then apart from that, then another type of bank is RRB, regional rural banks. Very, very important for UPSC Prelims examination. Individual questions can come from this on various schemes. Not direct questions on RRB as to what is RRB, but they can connect this for RRB in the context of a scheme, in the context of an initiative by the government. You understand? So this concept can come anywhere. Relatedly, they may ask you, connecting with the current affairs, etc., etc. Then other scheduled commercial banks, foreign banks, non-scheduled banks, and cooperative banks. Even cooperative banks is also important. You need to understand where and which place they are included and not included. Clear? RBI, we discussed completely regarding RBI, right? I told you entirely all the information regarding how it started, then the reason for it to start, etc. Even regarding the nationalization also I told you. That is how they became a public bank of public nature, right? Before it was private, after that they became a bank of public nature. All these things I told you. So now I can quickly go through that, because whatever I told you only, guys, and currently it is the central bank of our country, no doubt in that. And they regulate all other banks. And now they act as a government's bank and guide and regulated to other banking institutions. One of the important functions of central bank or RBI is what? Bankers bank. Okay. Bankers bank is one of the most important functions of RBI. You can just go through all those. They are also the regulator and supervisor of the entire financial system. They are the control of credit. They are the manager of a foreign exchange. They are the issuers of currency, because currency has been issued at RBI. Go to NASIC, you can see issuing of currency. Then they are also the banker and debt management of Government of India. So there are n number of functions performed by the RBI. Clear? Now you can just go through whatever I told you only, the same points. Now you have another type or category or structure of banks called as public sector banks, which comes under the scheduled banks, then your cooperative banks, your private sector banks, your RRB, and your foreign banks. So scheduled banks can be of different types. They could be public, they could be private, they could be RRB, regional, they could be foreign, they could be even cooperative. So we're going to see in detail regarding these quickly. Now, what are scheduled commercial banks? They're very, very important. Don't you think so? One second. Yeah. So don't you think so? Scheduled commercial banks are quite important to understand, guys. If you see all the commercial banks in India, I repeat the keyword all. Now, why I'm stressing on this keyword all is from your prelims perspective, guys. As far as MCQ series are concerned, sometimes UPSC gives you some questions based on all, only, whole, never, fully, cannot and all. They come under the category called as extreme words. Like your vowels in English, A, E, I, O, U. These are called as the extreme words. The rule is that many a times, people eliminate the statement with, such extreme words, and they consider it to be wrong. But I have always told you that it cannot be the case, right? That is 95% they could be wrong with such extreme words. But then if you see 5% they could be correct as well. That is why I taught you a technique called as keyword elimination comparison technique. Remember, those who do not know what that technique is, very simple. Below the description box of this class, the links of my special class is given, 6 p.m. class. You can click that and watch it live. Even the recorded sessions are available. So you'll get to know how to solve MCQs and what all to, focus. And now why I said about that here is, now in the context of commercial banks, guys, mostly they confuse you with the keyword all. So people may think that it is an extreme word, so we'll eliminate. That is not the case. If you see all the commercial banks, okay, without any sort of discrimination, they are categorized as scheduled and non-scheduled, and they come under the Banking Regulation Act. People may think that even the only schedule will come under the banking regulation, non-schedule will not come. Both scheduled and non-scheduled, guys, they will come under what? The Banking Regulation Act of 1949. Now, and by definition, it is said that any bank, that is your commercial banks, any bank. One second. Hold on, guys. Yeah. Perfect. So now, as per the definition, it is said that a bank which is listed in the second schedule of your RBI Act of 34 is considered as what? Scheduled banks. Now you may think that what are the examples of scheduled banks? Very simple. Here's SBI, State Bank of India, that's a scheduled bank, and all the subsidiaries. Subsidiaries means what? The banks that come under that. You're a State Bank of Travancore. But all these are merged together now. Then all the nationalized banks. I repeat, all the nationalized banks, guys, they're also coming under scheduled banks. Okay? Like Bank of India, Bank of Baroda. Now, people may think only public sector banks will come under schedule. It is not like that. Even your private sector banks, even your export-import bank, matlab the foreign banks, even the RRB, regional rural banks, your foreign banks are like your Citibank, your HCSB holdings, all these things, including some cooperative banks, they all come under the so-called schedule list. Clear? So now we'll be thinking if all these come under schedule list, then what will come under non-schedule? Because you get confused with the scheduled and non-scheduled, thinking that scheduled is public and non-scheduled is private. That is not the case. Even the privates and RRBs and cooperative banks also do come under the so-called scheduled bank, because they come under the Schedule 2 of the RBI Act of 34. When they come in that list, they will given that recognition. Clear? Now, till 2017, okay, that is 3 years back, this scheduled commercial banks in our country, India. How many public sector banks they had? 26, more than 20, literally 26 public sector banks they had. But then, that 26 banks, guys, later it decreased. I'll tell you how. So initially, if you see till 2017, scheduled commercial banks of our country, India, comprised of 26 PSBs. That include your state bank and all the associates of state bank, along with the nationalized banks. That is, nationalized banks was only 19, and also your IDBI, Industrial Development Bank of India. But when there was a creation of a bank called as Bharatiya Mahila Bank, exclusively for the context of women perspective. Now that increased the total number of public sector scheduled commercial banks to 27, because Bharatiya Mahila Bank was included in that. But now, though that is the case also, recently there was something called as merging of banks. Guys, you can just go through one of the article what I published in one of the international journals. It is called as merger and management of banks. I will send you, the PDF of that in the Telegram channel. Remind me, I've published an article in International University with ISS number based on this merger and management. You can go through. It was a very, kind of 3 months back, you had an issue based on this. Not 3 months back. In fact, before this coronavirus, I think, yeah. There was an issue going on regarding the merging of banks and etc. Because with regard to the bank employees and all, they were striking and all. So it's a very important, current affairs topic. So now, back to what we were discussing. So now when this Bharati Mahila Bank came, come on, the public sector banks increased to 27. But again, the recent merger of such Mahila Bank with SBI reduced the list back to 26. So currently it is only 26. Clear? So many banks were merged. If you see even your Syndicate Bank, very recently, Syndicate Bank got merged with Canara Bank. You know Canara Bank and Syndicate Bank, but now it is one. Even the account holders of Syndicate Bank will have to come to Canara Bank. They got merged together. Similarly, the State Bank of Travancore, which is a subsidiary of SBI, that also got merged with State Bank. So that they are doing a lot of merging, and the government is saying that come on, merging will give a load of transparency and accountability, etc., etc., and ensuring that no banks go in loss. So thus, this is the commercial banks with regard to the nationalization and public sector banks. I told you that even the commercial banks, scheduled commercial banks, they consist of private sector banks also. Which are those private sector banks? If you see the scheduled private sector banks, they include old private sector banks and new private sector banks. And thus there are 13 old private sector banks and 9 new private sector banks, including the newly formed Industrial Development Financial Corporation and the Bandhan Bank. I repeat, IDFC and Bandhan Bank, guys, they come under the so-called scheduled private sector banks, which consist of the old as well as new private sectors. Clear? What about foreign banks, guys? Again, the scheduled foreign commercial banks, which consist, if you see, the scheduled foreign national banks, there are 43 in number, which is operating for our country, India. And if you see regarding RRB, come on, that is very, very important, guys, with regard to your, rural development. From the keyword regional rural banks, basically for the development of rural India only, the Ministry of Rural Development is also supporting this. Now, this RRB focus on what? Lending on the PSL sectors. What is PSL? The current affairs perspective. Priority sector lending. What are the sectors of economy? Agriculture, industry, service. In that, agriculture is always the priority, right? So, more than 90% or let's say, 90% of, loans from this RRB goes to the priority sector. Doesn't mean that only agriculture and allied activities are, the priority sector, and only for that RRB give loans. Even for education, even for some other, housing benefits, for that also RRB gives loans. They are also important sectors which cannot be ignored these days, right? But most of the times, though they can give loans for other provisions also, they focus only on the priority sectors. That is the whole point. Clear? And since 1970s, you have this RRB in our country, India. And now, why they were started, there is a reason for that. Why would, though you have commercial banks, okay, commercial bank actually will lend the money not only to industrial people or investors, guys, even to farmers, even to rural people, agriculture, everything they have to lend. But that was not happening properly because of lack of collateral security, because of lack of repayment capacity. These commercial banks, they were skeptical. Come on, let's not give to these farmers or agriculture people and all without any much of collateral security and all. So now that literally, led to the creation of a bank called as Regional Rural Bank, exclusively taking into consideration this priority sectors or the rural sectors, agricultural sector and all. Clear? And now, as per the current affairs context, your priority sector lending is a new thing which has been put forward by the government. You can go through that as well. The reason why it was created was because of this. Clear? So people who think RRB is just a part of commercial banks, that is not the case. Because of the inability of the commercial banks to lend to the important sectors like agriculture, then farmers and rural sector only, this RRB was put forward. In fact, it is a blessing because at least there is a specific categorization of priority sector as well these days, right? Their needs are taken into consideration. Because when loans are not given, what happens? Automatically these farmers or the agriculture people, they rush towards what? The money lenders, the intermediate middlemen, and they do a lot of kallatrams and frauderies, vagara stuff. At the end of the day, what happens? At the end of the day, they end up paying more interest, they end up losing their lands, unable to pay the money, they are being looted, and at the end of the day, they end up in suicide. This is what is happening, right? The biggest example is in Maharashtra, guys. The place is called as Vidarbha and Marthwada. Many farmers suicide happen because they are unable to pay back the money, the bankruptcy and the money lenders issues and all. So basically, to avoid all these things only, RRB was put forward because commercial bank is not giving them much of money. So let at least RRB does. Clear? But in reality, if you see again, RRB is not completely doing the entire job or completely it's not giving loans to every farmer, but still something is better than nothing, right? In that context, yeah, you can just go through it. Yes, Alok has asked a question. Ma'am, please give me and this answer to this question. To reduce recurrence of scams in India, capital markets, the government of India has assigned regulatory power. I will answer that towards the end of the class, Alok, in the context of capital market. We'll be discussing about that. Don't worry. And one more thing, see, Alok, if you want to reduce scams now, Indian capital market, they have powers, but then regulatory power, come on, the keyword regulatory makes you think. How can we say that Indian capital market is having regulatory power to reduce scams? If that is the case, then scams would have been decreased now. But every now and then scams are increasing. You need RBI regulations. There are regulations in the context of organized and unorganized markets. And also in the primary and secondary markets, which consist of your capital market, money market, etc., etc. Clear? They have to be, that direct thing has to come from them. Clear? Now, back to what we were discussing, the non-scheduled banks. So just like your scheduled banks, don't you think so? It's quite important to know about the non-scheduled banks. So again, they are those which are not listed. Scheduled means the one which is listed in the RBI Act. The non-scheduled is one which is not listed as per the RBI Act. So now, for example, any bank with a reserve capital of less than 5 lakh rupees, they are called as non-scheduled banks. And unlike scheduled banks, they are not entitled to borrow from RBI. They cannot even think of borrowing from RBI because they are not scheduled banks. They don't come under the provisions of RBI Act, right? So how can they even think of borrowing from RBI? You understand? But there are some situations like emergencies and abnormal circumstances. In that case, there is a provision where even this non-scheduled commercial banks, they can borrow. And a big example of your non-scheduled commercial bank is Jammu and Kashmir Ka Bank. You can just go through that. And cooperative banks, both in rural and urban and non-urban areas, rural areas, they operate. And all banks which are coming under or registered under the Cooperative Societies Act of 1912, they consider as cooperative banks. In urban centers, they mainly finance entrepreneurs, small business, MSMEs, self-employment, etc., etc. So then they'll be able to cater to the needs of buying homes, like a housing loan, and also meeting the educational expenses. Similarly, like your rural, urban areas, even rural areas, cooperative banks function. So people may think that cooperative means it's urban. That's not the only rural. That's not the case. Rural plus urban. UPSC can confuse you in this topic in the context of rural and urban perspective. Very simple topic. But these are the words they'll use to confuse. Either they can ask you urban and non-urban areas, which means rural areas, or urban and rural areas. Both guys, in both the places, yes, cooperative banks do operate. Clear? In urban centers, these are the sectors, section of people they finance. Whereas in rural areas, they basically focus on catering needs of the agriculture activities, which includes your farming, livestock, dairies and hatcheries and all. They give loans for that basically. And all the small scale units, cottage industries, self-employment activities, all these things, guys, they have been getting support from the cooperative banks. Clear? It's actually the motto of this cooperative banks, and it is not like complete profit motive and all. They work on a no profit, no loss basis. Matlab welfare is there, but a minimal profit as well. Again, this cooperative banks, they come under what? The RBI, under the Banking Regulation Act of 49. Now, you're going to talk about the development finance institutions. Very, very important. Now, this development finance institutions, guys, they are quite important because they are a gap filler. Because in the context that they actually try to give finance for all the developmental projects, making sure that there is the lack of money or credit has been solved, that particular issue has been solved. And now this particular development finance guys, they also help in improving the working of economy by ensuring that, for example, if they even make up for the failure of financial markets, institutions to provide some kind of funds to economic agents. So now when they're giving money to such kind of economic agents to prevent such kind of failure of financial markets, automatically it leads to improvement of the economy, right? And they target all the economic activities agents and who are rationed out of market. So automatically it is encouraging the people to take risky business with the so-called venture finance. I repeat, venture finance. Venture finance and venture capital, they are indeed important topics, guys. This is something similar to like your angel investors. Okay, you can just go through all these. These are the importance of your development finance. Now we can just go through a classification of DFIs, all India DFIs, special DFIs, investment, refinance, state level, etc., etc. These are not that important. Now, what is important is the developmental institutions, guys. One is your ICICI Bank, the next is SIDBI. ICICI is very important because ICICI HDFC these days now, guys, they're even associating with Government of India. And if you see, even for a village model in Gujarat in one place, literally one of the bank that literally contributed actively was this HDFC and ICICI Bank. And also under the context of domestically systematic important banks, DSI banks, okay. That is domestically systematic important banks. Which are the banks coming under that? From the prelims perspective, this is a very, very important topic. You will get questions based on these connections only. That is your HDFC followed by your ICICI. They are the most important domestically systematic important banks. Clear? So now, the All India Development Finance consists of your, IFCI, IDBI, SIDBI, ICICI. So now basically ICICI, guys, there was ceased to be a DFI, and then later they were converted into a bank since 2002. But initially they were a development finance institutions only, but then they became a bank. So people may be confused. How can we say ICICI is actually a development finance, finance? But then they were converted. Clear? Similarly, IDBI, that is also later, though it was initially a DFI, Development Finance Institution also, it was converted into bank since 2004. Please note that. IDBI and ICICI. Now, Export-Import Bank of India. They come under the category called as Special Development Finance. So these are the different type of special DFIs. Along with the Export-Import Bank, you have a Venture Capitalist Fund of International Financial Corporation of India, even the Tourist Financial Corporations, IDFC, all these are coming under the particular or the special category of DFIs. Then LIC and Union Bank and Trust of India. It's very popular, right? They are the investment institutions, guys. under the so-called category, the investment institutions only LIs, UTI and General Insurance Corporation come. And most of you know about LIs because many of them have an account as well there for the basic protection and social securities and all, right? Then NABARD and State Bank, come on, we all know that. They are the refinancing institutions, National Housing Board and National Agriculture Bank for Rural Development, addressing all the activities or helping the rural area to grow up. They kind of give all the fundings. Then similarly, there are some state level development finance institutions. What are they? SFC, State Financial Corporation, State Industrial Development Corporations, basically addressing to the needs of the state activities with regard to various important sectors accordingly. Clear? And now, these are categorization of refinancing institutions, state level, all India level, etc., etc. Now, the All India Development Finance Institutions, what are they? The All India Development Finance Institutions, if you see, one is your IFCI, Industrial Finance Corporation of India of 1948. Very first, guys, in the yes, Manjuda, define DFI. Development finance institutions are basically for promoting the economic growth and development of a country by helping every sector of the economy in simple terms. Did you understand, Manjunath? Now, the All India Development Finance Institutions, guys, one is your IFCI. In the year 1948, it was very first set up. And now, though that is the case also, if you see in the year 93, okay, with effect from that particular date, this development finance institution, guys, they were converted to a public limited company. And the key function of the Industrial Finance Corporation of India is what? Giving loans. What loans? Short term or long term? Long term loans. It will be more than 25 years. It could even be up to 30 years. So for all the big industrial and infrastructure projects only, this particular IFCI will be used. Clear? Because from the keyword industrial, come on, it is long term infrastructure, the big bada wala projects, and even they guarantee rupee loans which are floated in your open markets. By whom, guys? By the industries, because Industrial Finance Corporation is obviously by the secondary sector of the economy, that is industries, and they will also be providing some guarantees for the industries, and there will be underwriting of shares and debentures. And thus your Industrial Finance Corporation of India was a public sector development finance institutions. Clear? And Manjuda, is it clear the meaning of DFI? Only then you can understand all these things properly. What about the others? All fine? Now, your ICICI, mostly all of you will have an account of this ICICI. Quite famous it is, right? And now they're contributing a lot as well, guys, these days in association with Government of India activities as well. If you see Industrial Credit and Investment Corporation of India, since 1956 it has been there, but initially it was set up in 1995, then it was approved officially in 56, and since April 2002, again your ICICI, which was a development finance institution, that was converted to what? A bank. We all know that. And what are the functions? Again, from the keyword, whenever you have industry, guys, in any of the banks ka heading, believe me, 101%, they deal with the infrastructure perspective, economic, social, physical infrastructure development. So infrastructure projects are the core for the development of any economy, and they cannot be short term. They have to be long term, more than 5 years, 10 years, or 20, 25 years and all, right? So automatically ICICI, they are providing long term and medium term loans or equity participation, and even they guarantee loans from every other private sources, guys. And this ICICI, along with that, they even provide some consultancy services to industries, how to improve, etc., etc. So now, do not confuse your ICICI with your IFCI and IDBI, because everything deals with industrial finance. It is not the same. Now, your ICICI, your IFCI, Industrial Finance Corporation and Industrial Development Bank, come on, they are all for giving long-term loans, no doubt in that, with regard to the industrial perspective. But they quietly differ with regard to their ownership, the management, and the way they lend money. So ownership, management, lending operations of these banks totally differ. Clear? Though they are sole, idea, or their whole, subject matter centric towards industrial credit, giving of industrial loans or credit also, they are with regard to ownership, management, lending operation, they differ. And thus this ICICI, that is what? It is a development finance institution, but it was a private sector DFI. Now it has been converted to bank. That is a different thing. Previously it was a DFI and in the context of private sector. Then IDBI Bank, which talks about banking for all without any sort of discrimination. That's what they say, right? Industrial Development Bank of India. So now, again, this was initially set up in the year what, guys? In the year 1964. And now they were set up as a subsidiary of the central bank of our country, that is RBI. But in the year 76, after 10 or 12 years, they were made fully autonomous. Now they were considered to be an important or apex organization because they are a subsidiary of your RBI. And now this IDBI, look at the keyword development. Since they're focusing on the industrial development perspective, they were considered to be an important apex organization in the field of development financing. But later again, they are not a development financing institution. They were converted to bank, guys, since 2004. Now all these are coming under the bank category only. They are not a development financing institution. Previously they were. Okay, again, giving loans, refinancing against loans granted to industries, acting as a coordinator of DFIs at all India level. All these are the functions of IDBI. And previously, before being converted to a bank in the year 2004, the Industrial Development Bank of India was also a public sector. Look at this, guys. Your ICICI, it was a private sector DFI, development finance institutions. But later they got converted to what? A bank. In the year 2000, in the year in which year? In the year 2004, right? Yeah. So now similarly, if you see ICCI, what happened? Sorry, IDBI, what happened? Again, they too got converted, guys, in the year 2004. Clear? Then SIDBI, Small Industries Development Bank of India. Now, again, if your IDBI, Industrial Development Bank of India, is a subsidiary of RBI, now your SIDBI, it's a Small Industry Development. Now they come under the under your IDBI. It's a subsidiary of Industrial Development Bank of India since 1989. Okay, and then they are also given an apex or important designation status in the field of small scale finance. Your microfinancing and small scale finance, they're given a more important designation in the context of that. And if you see in the Union Budget of 1988 to 89, they proposed even delinking. I repeat, delinking of Small Industrial Development Bank of India from your Industrial Development Bank of India. Though they are a subsidiary of IDBI, although they want to have a delinking and have a separate status. And the main function of Small Industrial Development Bank of India is from the keyword small. It is understandable that yes, they want to give finance or credit to all the micro and small units, basically helping them out. And don't you think so? These days, as far as the Indian economy is concerned, though we are progressing too much also, the COVID-19 has hit our economy. And even before COVID-19 also, guys, the emergence of MSME, micro, small, medium enterprise, is on the rise. Small and medium sectors. And the government is focusing more and more. ಇಲ್ಲ 35 ಅದರ ನಾನು ಎಪ್ಪೂಡು ಅರಿಲ್ಲ ಹಾಂ 30 ಎಪ್ಪೂಡು 35 ಅನ್ನೋರ sorry guys. So yes, even if you see them from the keyword, it is understandable that they always focus on giving some help assistance to these small scale units. Okay? And now even today, if you see MSME, guys, we know the importance of small scale industries and small scale businesses, because majority of people are put up in the informal sector, right? More than 90%. So automatically what happens? Automatically, if you see, when majority is put up in this in the informal sector, it is very important to help them a lot. And because of the unemployment problem in our country, it is very, very important to make sure that, yes, these people are given some sort of employment opportunities as well. So taking into consideration all their considerations, yes, MSME can even be a potential game changer for the growth of Indian economy. Clear? And these days your MSME is quite important. Yeah. Then you have the investment institutions. What are they? Your Union Trust of India, UTI. Since 1963 you have, and now they were passed or introduced or set up after Parliament passed the act called as UTI. Very simple. Union Trust of India is for savings, guys, for channel savings of people into equities and corporate debts. And the flagship of this Union Trust of India was called as Union Scheme 64. But though that is the case also in the year 2002, again the central cabinet, Union cabinet, they decided to split this Union Trust of India in UTI 1, 2, etc., etc. Why? Because they want to have a more specialization. As a result of a lot of crisis, a long-term crisis was happening in UTI. Because of that, they want to split this into UTI 1 and 2 for a reduction of such kind of crisis. Then LIC, come on, we all know. 56 you had it after the insurance business was nationalized, and this is quite famous as well, right? Because insurance is required these days for everybody. And the objective is to provide some sort of assistance, guys, in the form of term loans, subscription of shares and debentures, and thereby giving some source of support to all the financial institutions by making sure that they're coming under the life insurance coverages. You can just go through. Then GIC. What is GIC, guys? General Insurance Corporation. That also comes under the corporation insurance perspective only. Now again, the General Insurance Corporation, guys, like LIC, they differ in some perspectives, because they were formed by the central government in the year 1971 after independence only, and they had 4 subsidiaries. What are they? National Insurance Company, New India Assurance, Oriental Insurance, and United India Insurance. These are the 4 subsidiaries of your General Insurance Corporation of India. In this, your Oriental and your United Indian Insurance, they are quite famous. And thus, the General Insurance Nationalization Amendment Act of 2002, they literally, as per this act, they want to de-link this General Insurance Corporation of India from the 4 subsidiaries. They did not want to have any sort of associations with these 4 subsidiaries and your GICICI guys after the amendment of the General Insurance Nationalizations. Clear? So yes, my young officers, that's all for today. We have done with the first part of banking chapter, banks and the different type of banks along with institutions and all. I hope you really had a very good insight on all these topics. So thank you so much. So don't forget to put forward your valuable feedbacks and also make a point of subscribing and liking this video and also putting your comments and feedbacks. Whatever topics you want, feel free to put them in the chat box and make sure that yes, next time I'll come with some videos as well. So did you all enjoy, guys? Did you all have a thorough understanding of this banking and all? I hope all your doubts regarding the basis of banking, etc., has been resolved. So hereafter, you will not have any doubt on the basics because your basics became very strong, I feel. So thank you so much, my young officers. Now, in another half an hour, not half an hour, hardly 20 minutes, you have a class in Unacademy platform, guys, the free special live class, okay, on top 500 mains question answer writing by me. So do come for that class. The link of that is given in the chat box. Sorry, in the description box. If not, go to my Unacademy profile, the profile that I showed you. Go to Unacademy, go to my profile, even in my Telegram channel, guys. It is given. Those are not a part of it, you can join. And go to the special classes, click on this, answer writing courses. Look at the dates. I've even given the dates, guys, along with the heading. So you can, watch me there live. Clear? Chalo, okay, surely. Yes, Alok. Okay, Sandeep. So, chalo. Bye-bye. Thank you so much, my young officers. See you all in some time for the free special live class. And also for the 6 p.m. class, the link is given in the description box. You can even register and enroll for that as well. Bye-bye.